right, good morning. Let me restart my Discord here. I always have to do this in the mornings because it's the stages function is just busted. So let me go ahead and get that ramped up here for the Discord people. All right, good morning, good morning. How is everybody here in the Discord? Let me just send some messages out in the free chat just so we get everybody in here. This is one of our 2 weekly Market Open live trade streams, so I want to make sure that everybody has an opportunity to hop in. And there we go. Hey, what's up, V. Michelle? Good morning, good morning. Let's see who else we got. We got Sir Nuts a lot. I love it. Sleepy Pop, kudos to jumping in that free trial yesterday. I did send Nikki a message. She's going to be hanging out with you. Let me turn off streamer mode here so I can see your guys' names. Og and Wolfman, good morning, good morning. Saj, Clark Kent. Oh, we got Superman in the house. FFCO. Let me share my screen for you guys as well. We'll get that fired up. Can you guys all see my Weeble? And can you hear my face? Can't go through all your names, unfortunately. It's not showing me your full names here on Discord. It just likes to hide them. But I see a couple of people that we like. We like Tammy, obviously. Tammy's probably my #1 person at this point. No offense, everyone else. We got Mr. Mule. Congrats. Mr. Mule's been crushing it in the rags to riches. He's been sharing his covered calls and he's found his leverage in the market. It's good stuff. Bebnet's here as well. Duco, as always. Are you driving right now, Duco? You just listening in? I got to open up the chat here in a second. We got Rollin. We got Catgirl. It's just a earlier version of Catwoman. Halle Berry, maybe a child of Halle Berry. Not sure how that works out. Let me go ahead and open up the chat. There we go. Yep, to both. Okay. What's up, Hueyas? 316? Is that did I pronounce that right? I probably shouldn't have said the H, right? It's just Hueyas. I don't know. Anyway, all right, let's get pushing here. So as always, I've got the top gainers open. We're about 13 and a half minutes. What's up, Stickman? How the hell are you? Let's get rocking and rolling, guys. So I've got a couple items here. I've been watching BTCM. I'll probably jump into that one, catch a little piece of it. Actually, I might do that right now. Let me just take a look at, yeah, that's got the juice. Okay, so I'm going to go ahead and grab some BTCM right here. Now, this is a little bit risky, so I'm going to just set a sell target immediately at 724. Sell 100%. $7.24, and I'm just going to set that and let it cook. Right, as always, we don't want to have a lot of contention pre-market. So, oh, Stickman, you doing good? Good stuff, man. How's your pennies for the week? Those of us that were in Chicago, we have a little exercise where we lay out 5 pennies for the week, and then every day that we follow our trading plan successfully, we move our penny up off the midline, and then if we deviate or if there's some sort of like if we overtrade or if we revenge trade or something like that, then we move our penny down. And then it's not to get all 5 pennies to be perfect, but just to identify the days where we have challenges, so then we can study them and share them and hold each other accountable and stuff. Kaplan said Tesla Grok news and he's selling his puts. Yeah, so Grok 4 came out. It's about $300 a month. That's a pretty high-end version of the AI. There were also some, there was another headline. I don't know if you guys saw that. They put out some, Grok had some anti-Semitic posts, praising Hitler and stuff. So they scrubbed it. They got it under control, but that does express some concern about the training model. So it had a little bit of an unhinged moment. So we'll see if that can, we'll see how that does. But they are probably going to have to put some more resources, time, and effort into that. 2 up, 1 down this week so far. Good stuff, man. And today is day 4. So 2 up, 1 down. I like that. That's good. Roland is glad SAFX recovered. Let's take a look at that. Oh, yeah, look at that. It's a nice one. Were you... I mean, that thing is just falling off the planet. You mean recover as in from this high up here, pulled back down and then kind of pushed back up with that wick? Like this? Grok acting like Kanye, yeah. It exclusively gets its weighting from Kanye's Twitter. Yeah, J-Wag, I grabbed some BTCM. It's a little bit of a pre-market mover here. Just kind of letting it cook. It's consolidating high so far, so we're okay. Now, again, I don't want anyone to copy trade. Here's the disclaimer portion, right? Always do your own research. Always do your own due diligence. Just because you see I'm doing something doesn't mean you have to do it. I want everybody here to get to the point where they are confident in their own trades and that they're not relying on someone else or guessing, right? I want you guys to manage your own risk, and that's your job. It's not to, grab trades and be right all the time. Also, let me make sure I'm not muted. Okay, there we go. To make sure I wasn't muted. Freaking Kanye. Yeah, so the SAFX, you said you entered at 3 and it went down to 205. Oh my. So you dropped about 30% on that one. You had about 30% drawdown. Shut up, alarm clock. It wants to be on my stream so badly. So let me ask you a question. Does it align with your trading plan and your goals of making money in the market to let that equity position fall down 30%? JWAG, Discord's really screwing me today. Audio, internet. I'm sorry, man. Yeah, my internet's been like really choppy yesterday and late yesterday and early today. I don't know what's going on out there. Maybe it's sunspots. We'll see. We'll have to wait and see. All right, so this is getting ready here. We got so we can zoom in on this candle, and you guys can see that it's got a little heartbeat, and then it stalls up here at the top of the candle. That's what I like to see. And then as soon as this breaks, there we go. So we should pop pretty soon here. So it's a hall marker for volume, right? So I'll draw it out here. So let's just say up here we've got our candle, and it's doing this, and then it pushes up, and then when it stalls just like that, when it stops doing this, and it pushes up and freezes, a break over that threshold typically leads to a massive pop. And when I say massive, I just mean the one that I'm looking for, bigger than the size of the relation there. ROM 80 with a spam message. No, sir. So when you're ready to not rely on trying to scam people, you're welcome to join us. We can teach you how to trade, but I don't like the terms of your offer. So thank you, but no thank you. We've converted some spammers because they just get tired of working so much for like $4 a week. So instead, maybe put one of those dollars into the market every week, and then over time you'll be able to liberate yourself financially. Everybody's a little different circumstances. Porter says, same JWAG, I've had to leave and come back 3 times already, leaving again now. This box is green but no sound. Let me put the YouTube link on here for you guys, just if you're having audio trouble. I'll put it in the Discord, and then you guys can just watch that. Or if you guys want, I can give you I'll give you my Twitch link, and then that way I don't think there's as much delay. So try that out, see if that works for you. Get rid of the thumbnails. I hate the thumbnails. And yeah, just see if either of those has lag, and hopefully that'll work out. Yeah, I got Twitch, I got Kick, 2 X accounts, YouTube, and then the Discord, obviously. Oh, gee, I got to leave and come back 8 times. Whew, that's dedication, though. So I'm glad you're here, man. Porter's working okay since I restarted. Yeah, sometimes they just push little weird updates, and it might be that. Mule says, so far so good. He's got Starlink. All right. Nick, you want to look at MLGO and BTCS or BTCM? Because I'm in BTCM and we're about to hit our target. And I just hit my target. BTCS. All right, let's take a look at that. I don't like this one. It's not, it doesn't have any volume, buddy. What are you looking for? A swing trade? We got to be careful with stuff like this. That's, this does not hold on to profits when it runs. So at this point, given the fact that it's this high up, I mean, it's very difficult to justify maintaining risk exposure. And we've already kind of traded this one, I already got some notes over here. Let's see. Yeah, this is when we locked in profits already and then stopped in above entry. We traded it from around here up to here based on these notes. So when it does these kind of runs, when it gets the volume, that's when we want to get in, and we want to get out as or before that volume dries up, because this thing just does not hold profits. So I don't have a lot of confidence that it's going to pick up here. So MLGO is nice. That's another one, right? It's the same kind of stock. If you look at this, the ones that have these little spikes, they don't hold those profits. That tells us that those are ones we don't want to hold. You know what I mean? So if you're currently in, I can't legally tell you what to do, but I can encourage you to consider whether or not it has a history of continuation, right? So in this case, I only see a couple examples where it's continued. Now, this one does have a lot of potential, right? But it needs to be pushing. It needs to have that volume, when we get in. So this one's currently up about 9.45% pre-market, which is great, but the volume isn't there to really justify jumping in. Like, I'll show you the difference here for what I look for. So like BTCM, like, see how it's moving. It's forming new lows from candle to candle. It's got this increasing volume here when we got in. Let me see if I can find you a better example. For swings, it's a little different, obviously, but, for the price action, right? I want clean, strong directional volume. I don't want this stuff where it's just kind of, chopping sideways or, trickling down, after a big run, because that's dangerous, right? So it just takes a little bit of practice, a little bit of exposure to the market. But I don't want anyone to believe that, they need to have real skin in the game to learn, because I'm here every week. I can teach you guys some basic shapes and colors, and like Death Gun. I don't know, is Death Gun here today? I can't see the full chat, unfortunately. Let me see if I can. I think he's like babysitting his cousins or something this week. No, I don't see him in here. Okay. He and I just chatted for like 2 days, like 2 focused days of conversation when he was available, and just completely changed his mindset and got him focused on what actually matters, and that is to focus on ways to minimize risk. So, when you buy a stock like MLGO, okay, and you're looking for a swing, like, yes, there's a ton of potential in this one, right? And I've personally traded the hell out of this one. I love this stock for just speculation, not for investment. But there's a lot of opportunity on this. But, if it doesn't keep going, right, you can have a thesis all day. Watch, I'll show you. Like, it's very easy to justify an entry, like right here, and an exit right here, right? Because you've got your pivots, okay? And you currently broke over that. You're coming back for a retest on a lower time frame. So if you get a push off that level, sure, it makes sense, right? And then you can move that stop loss up here, because in theory, you've entered when the price is going the direction it's going to make you money. And when it stops doing that or goes the other direction, you just have to get out. And then you have a target somewhere in the direction that's making you money to say, okay, well, this profit's good enough. I've made enough money. I'm ready to move on. And as it's pushing, you can sell off little bits, and you can move that stop loss up and all that good stuff. Ultimately, all you're doing is looking for ways to get out of the stock, right? So regardless of what your strategy is to get in, at that point, you should probably stop doing analysis, because all you're doing after that is just looking for reasons to talk yourself out of that analysis. So, if we show up, we put in the work, we do all the analysis up front, and then we get into our trade when it makes sense, we'll have a better time in the market. But in Chicago, I literally hid the chart, I hid the order book, I hid the time in sales. I let the members get in. I turned around, faced the wall, and I let Tammy stress herself out a little bit. She came up to the front of the room and she entered, and then it was my job to get out. You can't use hope, and you can't use secondary analysis. And that's why I don't want anyone to copy trade, because if you're just getting in because like I'm getting in, that's not your trade, but it is your money. And I don't want you or, you to follow me or anybody else, because that means you're trying to predict. You're hoping that someone else is better at predicting than you at that point, and it's not healthy. So I'd rather teach you guys how to develop very simple thesis for your trades, and then focus on risk management. Does that make sense? And I'm not trying to get like super preachy. I know I always do that, but your job is not to be a professional guesser. It's to be a professional manager of risk. So on these streams, what I like to do is let you guys pick a ticker, you guys pick a date, you guys pick a price point, and then I go back and I demonstrate over a set of trades net profitability with a very simple strategy. It's like a little magic trick that I like to do. Maybe we'll do it at the end of this one. But that it goes to demonstrate that, the analysis stuff doesn't really matter. And guessing is not a reliable not a reliable strategy. There's mechanical stuff we can use. So in this case, I am going to move this down to 48% just because if I try to do a full 50 or even 49 sometimes, it'll say I have insufficient buying power because I used half the portfolio for the first trade. And really quickly, I just want to reiterate that if I was trading on my own and I was a new trader and I just wanted to do 1 or maybe 2 trades a day, then in theory, my first trade is a win. I would have already hit my goal for the day. If my first trade was a loss, then I would take 1 more trade, and then that would either be a win or a loss. That gives me 4 defined outcomes. I'm either going to be 3% up, roughly, 2.5% up, roughly, or 1% down, or 0% because I didn't take any trades. Those are the only outcomes I should ever tolerate if that's my goal. So if for some reason I'm 17% down for a day, that means that I've done something different. So that's an opportunity for me to keep an eye on myself and hold myself accountable. So I have SAFX here. I'm just going to go ahead and watch this one. It is stalling here at the top of the candle. I do like that. It did break. I just don't see the order book. It's not stacked properly, so I'm going to go ahead and wait on that one. Now, if this one pulls down, comes back up, does the heartbeat, and then pushes up, then yeah, maybe I'll look for an entry, and I have a hotkey for that. I'm just going to hit Control 9. That's going to place a buy order with 48% of my portfolio, and then it's also going to set a take profit immediately. So I'm pretty much just going to be watching BTCM and SAFX today. I will probably pull up I'll change this to day, but I think I just kind of like it the way it is. So in this portfolio, I'm not doing any options trades or anything like that. Hey, what's up, Siam? Siam? How do I pronounce that? Help me. Help me help you. I really like what BTCM is doing here, but it's a little bit risky biscuits. There's the stall. As soon as it pops over, I'm going to enter. So there's the heartbeat. So right here, I want it to stall right at the top of that. All right, it popped over. I'm going to go ahead and enter. And I entered and set my target automatically, and I'm already out. That's how fast that goes. So if you're a scalper, that's going to be your bread and butter right there. And I'll walk through it again. Just like foundation is free. This is very fundamental stuff. You guys don't have to worry about. Like I'm kind of giving you some secret sauce here, but I don't want you to think it's anything complicated, right? So it's not something that's super special. It's just basic volume analysis. So when you see a candle, let me just move up here so there's less distraction, okay? When you see a candle and it's forming like this, okay, and you see it kind of doing this little heartbeat, and we'll watch some examples in real time as well. And then it stops heart beating, and then it stalls right up there. Maybe it'll pull back a little bit. Maybe it'll pull back a little bit. But when it stalls right into the top of the candle, and then it breaks over that, that's when we like to get in, because that's when you see those massive breakouts. And I'll explain what that is. So let's see if we can get another example here. So that's heart beating right here. You guys can probably see that. Here's a stall. Well, not yet. There's a stall right there. So that establishes a range, and then as soon as it breaks over that, we can look for another scalp. You guys see that stall? That was to the downside, so we need a stall here, and then we need it to break. So there's a stall. As soon as that breaks over, that's going to be our bread and butter. So now we wait, we watch paint dry. Now, if you look on the time or the order book here, you can see there's a zone recovery algo, and that's just when you see 2 symmetrical walls. They did break the bid wall up, and they put it over on the ask side, which means they're expecting a run to the upside. It doesn't mean it's going to happen, and these can switch back instantly. But that does mean that this was enough to compel that algo to adapt its strategy. And that means that we're likely to see a break to the upside so far. So we'll just continue to watch this one. And remember, it might pull back a little bit. What we really need to see is for that to push up here, do the little heartbeat, and then stall right up here, and then pop. Okay. And then from this target, the 779, if that was our entry, 779 plus 6%. I just like 6% target, so that'd be an 826 target. So we can go ahead and draw that. And then, of course, we just have stop loss in case we're, in case we get outvoted, basically. And then that way we don't stay in the trade if it's going against us, because we want to be in it when it's going the direction it's going to make us money. This hasn't moved far enough down, in my opinion. So it's still looking pretty strong, in my opinion. So I probably would have just stayed in. Now, I don't have any buying power left on this account. I've already taken my 2 trades and I'm up 5.82% for the day. But in my opinion, this would still be okay as a trade so far. But what's important is that that loss range, you know, if you do have to realize the loss, making sure that that's smaller than this. Does that make sense? Because let me just, what is this? This is somebody here. I'll put it in the chat here just so I remember it. 826. Okay. So what I'm going to do is I'm going to switch over to the baseline chart. And I'm going to switch over to the ticks. 1 tick. Okay. And we're going to watch some craziness now. So don't lose your minds yet. I'm just going to zoom all the way out here so we can see it. And we're going to draw some lines here at 779. And then we're going to draw some lines at 826. Okay, now obviously this is pulling down a little bit harder. So at this point, we can consider whether or not we want to stay in it. Yep, you guys can see that range is about, you know, that's way more than half of that. So, you know, we would have been out of that when I was just watching, I was swapping the chart type around. But the goal, if I just come back over here, the goal is to have something like this, where you spend more time in profit territory and a lot less time and a lot less range in drawdown territory. And if you're, you know, if your trades look like this most of the time, and you're afraid to lock in those losses, that's probably just because you've been locking in too many big losses. So that's where those stop losses are critical, because losses are what takes people out of the market. And we can always use this level for a re-entry, right? So if I wanted to, I could just do this. So this could be my entry. This could be my stop loss. Because again, if I'm entering, I don't want it coming back down. I just want it to go up and keep going. So if it does come back down, I can get out. I can take those small insignificant losses a few times if I have to. And then one win should wipe out multiple losses. And then every now and then, the first time will just be a win. And then I can just walk away for the day. Sorry, let me catch up on the chat. Patricia Parker on Kick says, hey man, how are you? I'm doing pretty good. How are you? I got all my booger hooks from, they're left over from 4th of July. I didn't lose any. And you asked if I played any games. Yeah, I play Arma, I play Overwatch, I play Diablo 4. I play Onward on a headset, but I don't really stream that. And I don't really get to stream the game so much these days. But I'm going to get back into that. So yes, if you're not in the Discord, if you're interested in the stock stuff as well, just putting it out there. That's a free to join link if you're curious. There's obviously no pressure, but Duco says I play all the lame games. Yeah. Well, if you want to come into the Discord and defend me from Duco, I would appreciate it, but no pressure. He bullies me. Let me catch up on the chat here in the Discord. Also, how are you doing? Patricia, how'd you find me? Because I don't think I don't stream too much on there, but I'm glad that you're here. All right. So let me, I'll get it off this chart and we'll get back to some actual, we'll get back to some stocks. Sorry, I got to zoom all the way back in. Let me switch this to day here and we can look for another opportunity. So we got SUGP. This one ran yesterday. We had a nice little opportunity on it. I think it was on Lee's watch list yesterday. Oh, you dropped a follow. All right. Thanks very much. I appreciate that. Definitely come back. I stream Tuesday and Thursday mornings on here every week at 9:15 a.m. So appreciate it. And I definitely want to spend more time on that platform. I gotta get around and meet good people, bring them in, help them change their lives. Yeah, so definitely thank you for following. I'll check your stuff out as well. Kick is lame. Well, Discord. I think we can all agree Discord is not it's not our superior platform here. Sorry, let me catch up on the Discord chat here. Oh, Duco, what did you do? What did you do? You hit your 3% for the day. Let me pull it up on the stream, sir. Look at this guy. That is 3%. So does this mean your trading day is complete? Because I want to point out something very special about this. Just a quick yes or no. One in the chat. What's it going to be? No longer touching that account. All right. So I want everyone to pay really, really close attention to this number right here. If I can zoom in. I'm such a boomer when it comes to this. There we go. All right. So you guys see this number? And you guys see this number? He's got almost half his account just settled cash. So I assume you used a 50% position, won your first trade, and you're done for the day because you hit your target. Or did you use some other strategy? Just a one and done. Man, I love that. Good stuff. This is a much... Are you feeling confident and stress-free? You feeling any FOMO? You want me to pull up SPX? I'm just kidding. That's awesome, man. Congrats. I love it. I love seeing this in you guys. Once you guys like figure it out, it's beautiful. SPX is the devil. Yeah, it can be. It's the devil you know, right? Yeah, SPX will absolutely destroy your soul if you let it. So there's never any pressure to trade that. I trade it because I've been doing this for a long time and I understand the risks and all that. But no, that's awesome, man. So you just got in and out, you took your money and you ran. I love it. So I'm watching SAFX here on so I'm just kind of keeping an eye on these percentages here. I don't know if you guys will be able to see them on the recording in the live stream. Yeah, okay, my camera's not in the way. That's good. Also, let me close up my calendars. I'm a calculator. I'm a collector of calculators. I don't know if you guys are like that too. I just keep opening a new calculator instead of like going back to the one that I opened. And I hate myself for it. All right. So actually, yeah, speaking of Tesla, let's go ahead and draw that out here. So yesterday we drew the, sorry, I'm on the 1 minute here. I got to zoom out super far. Let's go back to the 15-minute. So yeah, 2 days ago we drew the range, the opening break on Tesla. It was a pretty wide range, and then it kind of hung out. It puttered a little bit yesterday, kind of established his own little range, rejected to the downside, and that was all great and good. But the range from 2 days ago on the 8th, that looks like it got a beautiful clean retest and push back up. So if we were to draw today's, right? Remember, this strategy is super simple. We just go to the we're still within the first 15 minutes, so we can just watch. Now, this is another wide range, which means we might not get a good opportunity for today beyond this. But we draw the 15-minute opening range. That's kind of the argument that happens between the buyers and sellers, if you will, which we know is a lie. And then this is going to establish our volatility range for the day. And then we can come down to the 5-minute and look for a break above or below this range by looking for a candle close. So a candle's going to close below it, or a candle's going to close above it at some point, and then we can draw a line, or we can mark it somewhere in time and say, okay, well, after this point, I can start looking for setups, confirmations, and then we can go down to a lower time frame like the 1 minute and look for a retest of that box, that opening range, and then we can look for our entries. So basically, in terms of an analogy, think of this like a couple that's arguing. This is kind of both of them trying to get their point across. And then the 5-minute is like the mutter under the breath, after one of them wins. And then the 1 minute's like, what's that? What'd you say? That's the pullback, the retest. And then the confirmation saying, I thought so. So kind of a fun little analogy I like to use to explain that. But that's basically what's happening in terms of price action and supply and demand. Oh, there's Death Gun. I was just looking for you, man. We had our, we were talking about the 3% target for the day, just the one and done, and how you changed your mindset after we just chatted for about 2 days. I was kind of singing your praises here a little bit. Patricia Parker, actually, I work on things like logos, animations, and similar designs. Along with that, I also provide Twitch affiliates such as gaining followers and views. Well, so that part I'm not so interested in, but I'm always open to network. And we've got a pretty good community here if you're interested in potentially networking for commissions or something like that. We just don't allow soliciting. So if you happen to offer a skill, you're more than welcome to join the community and just kind of get to know everybody. But we won't be doing the solicitation thing. So yeah. Oh, look at Duco. What do you got, Duco? You sold your TSLL $10 puts. Let me put that up on the screen. It'll be easier for everybody. This is nice. I like this. Sorry, I keep saying I'm going to catch up on the chat and I just skip so far off. I need medication, guys. JWags, Pookie, what have you been doing on Twitch? Pookie's content is intended for certain audiences and may contain drugs and intoxication. That's because I do the video game once in a while and there's some swear words. I definitely don't do all that stuff. I hate alcohol. It just, bleh. Why would I drink nail polish? Don't do drugs, none of that stuff anymore. No tobacco. I never used tobacco. I just always found that gross. Love sexual themes, love violent and graphic. I'm just kidding. I gotta shut up. But no, we have a good time. But that's mostly just because of the people that I game with. So I don't want them like surprising me with something. Fergie, almost 15 minutes ago said KLTO is they got orphan drug status and they're moving. Let's check that one out. Looks like they're moving down. What happened there? That was around here. Was this the candle you were looking at? I'll catch up on the chat here in a second. Sorry. Thoughts on CGTX? Let's take a look. I don't like it. I don't like it. So all these biotechs, I mean, they're about to, get hit pretty hard. Money's going to flow in and flow out of those, with this administration and the changes and things like that. So things like this are great for those little short range scalps that I was talking about. But we really want to make sure that the volume stays and that we have nice low risk. So if, for example, we wanted to take a bullish trade on this one and we were to use this entry, right, the color change, then I would probably want to make sure that my risk range is very tight as well as my profit range because I don't want it to go the other way. Remember? So if that's my justification and I've got a tiny red risk of 1.49%, that means I have a 4.5% reward range and I just want to get in and out. I don't want to have to, I don't want to try to catch the whole move. I don't need to catch the whole move. My goal is just to get my 3% and get out. So if I take my portfolio size, in this case 251.35, and I divide that by 1.49, I'll show you guys a little magic trick here for the 1% rule. 251.35 divided by 1.49, that would mean I would spend $168.69 on these shares, which are 81 cents divided by 0.81. So I'd buy 208 shares of this, and then if this went down to my stop loss, my loss would only be 1% overall. Now, it's a little bit of a roundabout hack for the 1% rule because, I got videos and stuff on that. But that's a way to limit your risk. So if you do end up taking a bigger risk, like let's say that you wanted to catch a color break off of this guy, which again, the price is moving down, right? Let's use some common sense here. It's not moving the direction it's going to make us money. But if for some reason the price is going up or you saw some justification to get in here, then your risk range in this case would be 6.68%, which means we can use the 1% rule, 251.35 divided by, what did I say, 6.68? So $37, and then we would divide that by the price, which is 80.55 by 0.8055. So that would be 46 shares that we'd buy in this case to make sure that that 6.68% loss is only a 1.0% loss overall, right? So again, we don't want to get into stuff when it's moving down like this. There's a lot of FOMO, a lot of anticipation that, this will be the bottom and all that good stuff. It's very easy to fall into that mindset. But when it comes to these biotechs and these low float trash stocks, you can't do that consistently. So we do have a support level over here. You could make the argument that it has blasted out of here multiple times. And you can start looking for confirmations. But if you see a confirmation and you see a low risk entry opportunity and you take a trade, if this was your trade up here, and you're still in it down here, you have deviated. And this extra risk range right here is unnecessary. Okay. So that's the kind of thing that we can fix with a little bit of discipline and a clean plan. But I don't want you guys to hurt yourselves with this kind of garbage. It's not worth it. So let me just keep going on the chat here. Sorry. I play all the LAN games. Yeah. What do you like to play, Duco? I am old. I'm about to start playing Helldivers with my buddy. Oh man, Duco, I'm so happy, dude. This is a change. I love it. sitting on your cousins. Yeah. You haven't had a hot tub stream in forever. Oh boy. Yeah, I don't think we're there yet. I think that if it comes to that, we got some bigger problems in our society. If Pookie's in a hot tub for Twitch views. So stuff like this too, like you can't, like, this is risky biscuits, right? ABVE. So if you want to trade something like this, you have to get in and out. These are double-digit candles in terms of percentages, and this is just begging for a halt, and it's begging for all these people to panic. Okay, so if you're going to get in, you can get in. That's great, but you got to be super careful. This is parabolic, and the volume also carried on. So I'm assuming that this started with some sort of catalyst. So let's look at the news and see if we got anything here. I don't see anything current. Let's look at the comments here, just because they looks like it might be a short interest. Yeah, so there wasn't really a lot of attention on this one until about a minute or two ago. Let's see what this guy's saying. Shorts. Okay, so the short sale got restricted, which means they're trying to short squeeze this. Let's see what the float is. Yeah, so it's about 50 million. Ideally, you want this around 20 to 35 million, which is great. This might still get scooped up and continue pushing and all that good stuff. But, unless you were watching this one, you don't want to chase these because it's a great thing to watch. It's a great, it's fun and all that. But this is super dangerous. This is like picking up a cobra. It's cool. It's fun to show off. It's fun to see the big green numbers really fast, but those can also turn red very, very, very fast. So got to be careful. Just because it's short sale restricted doesn't mean people can't sell their shares. You know what I mean? PTCM looks like it's it's got a multi, this is a 5 candle rule. So those of you that are using that strategy here, you got a very easy setup here. Obviously high risk because it's still pushing to the downside. But this is the kind of setup that I like. So this is a 4.19% risk range, which means we would use the 1% rule. And again, I don't have any buying power, so I can't trade this anymore today. But what we can do is we could say, okay, well, I've got 251. I need to divide that by about 4, right? A little over 4.25, which would give me, let's see, $1.25, 60, 67.50. So it'd give me about 10 shares, 9 or 10 shares, right? I'm just ballparking it in my head. And then that way, if it falls down and goes to a loss, I'm not taking a 4.19% overall loss. I'm taking a 1% loss and a 3% profit. And that's all I care about. Does that make sense? Like why I would do something like that? Duco plays PUBG. Yeah, I see your server tag there, buddy. I used to play a lot of H1 back in the day. Minecraft, Elder Scrolls. Okay. I like Skyrim. I'll play some Skyrim. So you play Diablo. All right, you play Elder Scrolls, Fallout, Diablo, Borderlands, Dungeon Crawlers in general, RPGs, Final Fantasy, Lego Fortnite with the kiddos, Plants vs. Zombies. Okay. Yeah, Stickman wants to play Borderlands with you. I think I only played 2. I played Borderlands 2. I like that one. It was fun. PW, will I explain float and how to know what to look for? Yeah, so float is, let's talk about float first, and then I'll kind of ask you to clarify your question a little bit. So float just references the number of shares that are available to trade. Now there's different types, right? So if you think about it in terms of the company's journey, right? When a company gets big enough, they make enough money, they want to list to the market because they want to get exposure to all those investors, right? So what they do is they chunk their company out, or a portion of their company, into little pieces. And those are shares, basically, all right? Then it goes to the exchange, and then it registers to be listed and so that people can buy and sell those shares, okay? So the number of shares that it creates in total is the outstanding shares, okay? And then the limit of shares that they could ever potentially create is called the authorized limit, and that's in the company's articles of incorporation, which is just a document that says that they have to abide by certain rules. So there will never be an outstanding share number greater than the authorized limit. And So once the outstanding shares are created, that's it, unless they do some sort of other, like they typically have to vote, or there's got to be some sort of dilution catalyst that's pending, right? Because shareholders need to know about that stuff ahead of time. So let's just draw it as a bucket. Okay. So you've got, let me just turn this down here real quick. No extension. All right. So this is the outstanding shares. Okay. This is the total number of shares that a company's ever created at any one time. And this is what like private sales can participate in, the market can participate in, everybody can draw from this pool. And then within this pool, you've got a smaller section, which is known as the free float. And that's the stuff that you and I can participate in. That's what's available to the market. The other portion up here, these are the restricted shares. Okay. And sometimes this ratio, this balance will be a lot bigger and a lot smaller. I'm just going to move these off to the side. And then in that case, you know, that's where you get things like offerings and things like that, private sales that'll affect the market, convertibles. So if they sell like warrants and then those warrants get assigned, you know, there's any number of ways that stuff can turn into shares, right? The executive, the golden parachute, like they'll give employees shares. That's all up here in the restricted section. And what happens is if you get a low free float and a high restricted count, this is one of the most dangerous combinations known to man, because all of these can get dumped into the free float, which dilutes it, obviously. So it reduces the amount of restricted shares and increases the number of free float. That causes mass panic and chaos in the market because nobody wants to have diluted shares. Does that make sense? So if there's fewer available shares to exchange, the sale and buy of each one counts for more. So in terms of price going up and down, it's not an abnormal number of buyers or sellers. That's a misconception, and I like to explain this once in a while. What it is you've got orders that are filled in the bid and orders that are filled on the ask side. And there's different types of orders. There's market orders, limit orders. There's all these different types, right? And what happens is they're matched as best as possible by the exchange on the bid or the ask side or between or outside, right? So there's multiple factors there. And what happens is, depending on the order type and where it's matched and all that good stuff, that'll adjust the bid-ask spread because certain orders have certain weight, and that's what drives price up and down. It's not like, if you think about it, if somebody's going to sell their shares, right? Let's say the price moves up and they want to sell their shares, someone else has to buy them, right? It's kind of a common sense thing once you realize it. There's not some nebulous entity up here just acquiring all the shares. Like, they're selling to other traders, to other brokers, other institutions. And the notion that it's, you know, number of buyers versus number of sellers, it leads to a lot of problems when people start trading, right? Because they misunderstand the psychology of the market. So when it comes to the float, we want this to be pretty low, but the lower it goes, the higher the volatility is, because the more violent that movement in price is going to be, because it won't require as much selling or buying as a more diluted stock to move the price up and down, because each of those shares has more, or each of those transactions has more weight over the bid-ask spread. Does that make sense? I know I kind of went off on a little tangent there, but that's really what I'm getting at. Okay, so the fewer shares available, the more influential they're going to be over the price movement. And that's where short squeezes and things like that become so appealing. Because if you know that the shorts are no longer able to push the price down, and that can only happen from people selling off their profitable shares or losses if they're bag holders, then most people, including the shorts, will buy those shares because they want to buy to close their position if they're short, because they, you know, there's unlimited upside and they can hurt themselves really badly. So that's where you get stuff like GameStop and now this ABVE and all that stuff. So we got to be very careful with these, right? Because again, all these people that bought didn't own shares today before this move started. So all these can turn into sellers. And then, you know, anybody that's bought above here, left of this, can also sell their shares. So if I back out here, anybody that's still holding shares from all the way back here, all the way down to the beginning of today, can sell their shares. Okay. So it's not good to get caught in a short squeeze that continues to sell off. So you got to be very careful with stuff like that. That's why I don't like chasing those. It's great if you can get in early, but if you're not watching it and prepared without being in it, you don't typically want to chase these up very high. So we can watch it, and like I said, it's cool and it's fun, but super, super dangerous. Okay, and then yeah, that's like you get into like forward split, reverse splits, going dark transactions, all that good stuff to adjust that dilution of the float, and that's just adding or removing shares. And then you got like buybacks where your shares are technically destroyed and things like that. So let me just go ahead and keep going on. So when you said know what to look for, I guess I was looking for some qualification on that question. You guys are talking about Borderlands. I love it. I love it. I love it. Would you guys want me to play games in here? I could play games in here. We can get destroyed together. Pookie, I need you to DM me your VR info so I can add you. So this is the problem, man. I haven't been able to play VR so much because we got this dog and she's a psycho. She's a little psycho rat. So I try not to play at nighttime because she will just start barking and wake everybody up. But I'm down. I'm down. I got to get back on there anyway. I don't negotiate with terrorists. It's a psycho rat. Yeah. Great personality, super smart, but a real tyrant. Yeah, no, but for sure, man. I like Onward. I haven't played that in a while. PW says, yep, follow up. How do you see the available shares versus total shares and the changes in restricted versus public? So the easiest way to do that is just go to a site like Finviz. And you want to check a couple different sources because they're all going to kind of report slightly differently. So you're just going to get a ballpark. None of them are really accurate or up to date. So let me just go ahead and I'm just going to keep this up here just so you guys can watch the potential bloodbath here. I'm not saying it's going to go down, but there's potential. So on here, you're going to look right here. They'll say shares float and shares outstanding. I can make that a little bigger for you guys as well. Sorry, my browser's garbage right now. But right up here. So in this case, this one only has about 1 million shares restricted. And that's just the difference between these two numbers. So outstanding, again, is the total number of shares that have been created. And the shares float are the available shares to the market. So the difference between these is the number of restricted shares. So in this case, it's 1 million shares. So about 1/25th of the, or sorry, 1/50th of the total pool. Does that make sense? All right, Michelle, you got to run. Thanks for hanging out. I hope you had a good time, and we'll definitely catch up. So thanks for hanging out. We got our Rags to Riches stream tomorrow as well, so make sure you're there if you can be. That's fine. You don't need excuses. You need results, Pookie. We'll get you there. It's a don't be sorry, be better moment. I love it. Let's check back on Tesla. All right. So it looks like I got to change this also back to extend to the right. All right. So yeah, so we drew our 15-minute range. We come to the 5-minute. We don't see a candle close outside. So this is why I'm not really watching Tesla. Like the other day, it's just too volatile at open. So it's great if you want to catch like the pre-market high break or anything like that, but it's just super risky to try to catch this. If you wanted to trade the momentum, right? For example, it would make sense to want to take a put at market open, given that this is what you saw. And then it did stagger a little bit here. It did go down a little bit from open. So it would have made sense to try to buy a put, and then you would have got caught in a nasty upside. So this is why, Tesla's fun. And once you get it down, you can but for this size account, I can't trade these contracts. It's just too much. It's a $250 account. We started much lower, obviously, but we don't want to, just blindly chase expensive contracts because of the potential, right? So we'll get the account up there to where we can start doing that stuff again. But for realistic, think of it like a game, right? This is a level up guide. If I'm at $200 or $250, I don't want to be trading $175 contracts that have high volatility right at market open, because I will absolutely get destroyed in most cases. So I'm just going to trade reasonable trades. And so far we've hit more than 5% every single day this week, right here in front of you guys. So I'd rather just stick with that for now while the account's small, so we don't set ourselves back too far. And then those are just the consistent base hits that I like to lock in and move on. I don't want to work all day. I look at the chart more for you guys you know, as like you guys put tickers in the chats, than I ever do for myself. I look at the market maybe 5 minutes a day tops. You know, most days it's, you know, like 1 or 2 minutes. I just get in, get out. And I have that Control 9 hotkey so that it just sets my take profit order, and then I don't have to worry about it. And if it goes against me, I just get out for a small loss. It's okay. I absorb them. Death Gun placed your one trade for the day. Beautiful. You traded CRML and you're getting close to your take profit. Okay, so what time frame? Because I'm going to ask you whether or not it was this 1 minute time frame. Porter says, bro, you literally live trade for an hour, 4 days a week. But how often is it actually in trades? The 2 minute. Okay, that's what I'm looking for. Beautiful. All right, so Death Gun is the member I was praising earlier. So let's go ahead and I'm going to draw what I believe his analysis would have been, and I want to see if he aligned with that. So I'm going to assume that you had your entry at 305 and your stop loss at 301 or just below 301, and your take profit at 318. And since this is greater than 1%, use the 1% rule to buy. Drum roll, please. Well, let's grab a percentage, right? Divided by 1.41, 70% of your portfolio. Is that roughly accurate? Not you, Duco. Death Gun says just about. Okay. Is it freaky deaky that you and I can come up with roughly the same system, just completely separately? Like if I were to take you and Duco and told you both to guess, just pick some levels, right? You guys would probably come up with some completely different levels, right? But you and I completely independently came up with roughly the same price points, using the same ratio, same position size, and the same candles, basically. But you had to tell me the time frame and the ticker. I think it's pretty cool. Yeah, I think it's pretty cool too. Like that's you're trading a mechanical system that's repeatable, which means the results should be repeatable, right? Is it because I'm stupid? No, Duco, you're not stupid. Nobody here is stupid except me. I'll take it. I'll take the burden for all you guys. Just dump your assumptions. There we go. I just want to click that. All right, so let's see if Death Gun's trade works out. Now, Death Gun, you've got a 1.41% risk range, which you are assumedly using the 1% rule for. And you've got a 4.23% profit range, which again, if you're using the 1% rule, that's automatically just going to be 3%. So you have 3 defined outcomes here, right? You've got your 1% loss, 3% profit, or some deviation, right? So now, if we're in the trade, does it make any sense at all? Does it benefit you in any way to continue looking at the chart and performing analysis and finding ways to talk yourself out of the trade? No, right? Because it's just extra work and it's extra risk. Okay, because what you're doing is if you sell early, like let's say you get scared because it's up here and the last 5 trades you've had have, for some reason, come 1 cent from your target and then sold off and went to a loss. Those previous trades are influencing your decision making and they're disrupting your 1 to 3 risk reward ratio, right? Or if you move your stop loss up, for example, because you saw it pushing up right here from your level, and you don't want to take a bigger loss, which you were originally okay with, right? When you got into the trade right here, you were okay with this outcome and this outcome. And then all of a sudden that changes because you see extra stuff, right? You get more information. You're removing your stop loss, set 40% take profit, take a nap. I mean, you could do that, Duco. Occasionally you'll get rewarded. Right? So how many people here, I see there's about 40 people here. How many people here find themselves doing analysis on a stock after they're in the trade? Like how often are you looking at candles or plotting levels or identifying lows and things like that? Just a 1 in the chat if you do that, 2 in the chat if you don't do that. And there's no wrong answer here. I'm expecting to see a bunch of 1s. Duco, JWAG, I'm not calling you guys out independently. I'm just kind of Do go with a lot of ones. Okay. So now, for those who type 1, do you guys believe it's worth at least collecting some data to figure out if that's working for you or against you in your goal of making money in the market? JBag says yes. Getting some more ones in here. Patera, did you grab the trial yet, by the way? The free trial? Let me put that link in the chat for you. It's 100% free. There's no risk or anything like that. We don't take credit card info. Og, you too, man. If you haven't been in the, I'll put it on the live streams as well on socials. It's free. It's 100% free. You just join it anytime throughout the week, and then Sunday night, just touch base with Nikki if you're confused. Sunday night, she'll approve everybody, and then you guys will get a free week of premium. The only thing you don't get access to is the coaching chat channel, and that's just to not disrupt the people that are paying. But you get access to the live streams, and you get access to all the premium alerts, all the live streams that are in there. You just can't type in the chats on the coaching stuff specifically, but you can type in the premium lobby, the premium chat channel, and you can hang out in the lounge, and you can get on the trading floor and all that good stuff. Sorry, let me catch up on the chat. But again, it's there. All right, there's no pressure. Tick Breezy says, I like to donate to the market so all our new members can make money. Just tell us what you're selling and then we'll buy it, okay? That's it's a guarantee. I'm just kidding. I can't say that word. Thanks, mate. Yeah, no, for sure. I'd love to see you in there. Fergie says, I usually do some beforehand and I look further afterward to determine if I need to move my brackets. Oh, okay. So is it in your plan? I mean, you've been here for a while and you're a little more advanced. So is it in your plan to move your brackets, or is it in your plan to develop your discipline and like, are you pre or post discipline, right? If you're pre-discipline and your goal is to really solidify that discipline and to, follow out on your intentions, then the brackets really wouldn't be. Ooh, we got a double Harami for me. If your goal is to move beyond discipline and you're already able to lock in like that, and your goal is to walk the price up, you could do that as well. I'm just not sure which one benefits you the most. So in your opinion, what do you think is the best for your goal? Deathgun and Pookie, I don't know what to do. My buy order filled late, but neither of my exit criteria were hit. So can I just ride this trade like normal? So let me ask you a question. Is your ratio still intact? Like, how high up did you get filled? And I mean, in my opinion, if you're like 2 or 3 cents up, that's okay in most cases. But if you got filled like up here, then that's a disproportionate risk reward ratio like that. Like, that's way too bad, in my opinion. But if it's like right here, it's a little bit. But it's like, oh, you bought at 305? That's exactly where I have my entry. It just waited for the price to seek for 305. Yeah. So what did you have for your entry then? Because my entry here was 305. And then the target's 318. The stop loss is 301. I think you're okay, unless it filled it like some other number. Fergie says, if the purchase price is really low, like ABVE that I just traded, it stopped out immediately after I bought. I have to manually manipulate those. I'm new at doing this, and I'm still refining my process. Okay. So does it make more sense for you to focus on trying to move brackets and stuff and to continue doing analysis? Or does it make more sense for you to just set 2 levels and then assess yourself and document your emotions and thoughts throughout the process of waiting for one of those 2 levels to get hit? There's no wrong answer. And, you and I have talked quite a bit. So I have to ask you because it's your decision. Repeat that. So the first option is to just set your levels and then assess yourself as you're waiting for the one of the 2 levels to get hit or for time to expire. Or does it make more sense for you to continue doing analysis and moving brackets and things like that? Like, is your discipline locked into the point where you don't have any stress or emotions as you're waiting for something for that resolution to happen where you can close the gap? Or do you feel like moving stuff around and doing analysis is adding to the stress? Let me just catch up on the chat as well. Death Gun saying, I'm more saying my buy order filled a few minutes after I placed it, so I thought my trade was placed and going when it wasn't. Okay, I got you. So you just didn't get filled for a while. There was like a delayed fill. And that's okay in that case, as long as it doesn't go too high up. Like you guys have seen me do that on streams a couple of times. Now, in this case, it looks like the volume just died, right? And there's not much you can do at that point. Okay, you sold that immediately. Yeah, no hesitation, right? Because you can always get back in if you want, but there's no volume here, right? And the fact that it's gone down, it's gone against you, kind of, it contraindicates that that's a setup where you are going to make money. You can't get back in. That's okay. That means that if you can't take another loss on it, right? That's all good. You took an entry that made sense. I mean, there was a lot of strength there to the downside, but that's okay, right? There's still potential here. There was volume when you got in. You had a nice defined risk that was minimal. You had assumedly the 1% rule in place. You know, the price did in fact go the direction you intended, but it wasn't enough, right? And that's okay, because just because we see this before it hits this doesn't mean that it was a bad setup, or that, you know, you should have compromised and moved your profit down, and because you didn't have access to this information in the moment. So it doesn't matter. But what you did is you identified a high potential, low risk opportunity. You put yourself in front of it. It started doing what it was supposed to do. And then you just got outvoted and it went to the downside. And at that point, you took immediate action, got out when it mattered. So that's beautiful risk management. You did a great job on that. So even though it's not a profitable trade, I would still say that's a successful trade, because you did what you set out to do, and that is to be a professional manager of risk. So what you've done by doing that, by protecting yourself on this trade, is you've protected the dozen or so other trades that have made you profits, or however many you have. I haven't been tracking yours specifically. JWAG says stress. Yeah, yeah. If we're constantly working, okay. So let's break it down in terms of a job, right? So if you go work at a job, okay. Let's just say we got some levels here, right? We've got level, level, level. Okay. Your job involves this, or your job involves that. There's two outcomes here, right? Your job exists as a function at these two levels and these two levels alone after you're in, right? So let's say we get into a trade right here. At that point, nothing else matters except this level and this level. Okay. So what we do is, prior to this, we've done work, right? We've done analysis, we've done weighting, we've put effort in, we've put focus, time, attention, and then we expose real risk. Okay, we put money on the line. And then what we do after that is extra work, right? So think of this like working your shift, right? You go to work, you clock in, you do your shift, and then over here is payday, right? This is payday, but over here is the work time, okay? So once I'm done working, I'm done working. All right. I don't care to hang out at my job after my shift is over for no change in pay, right? Because what's going to happen is, like, this is all up to the market and not at all up to me. So what's going to happen is one of these two levels will be hit, but I don't have any influence on which one it is. Oh, I'm sorry about that. I got to turn the camera off for the recording as well, for the live stream. Sorry, guys. Let me turn that off because it's over on the side here. So yeah, so this is my shift. This is where I work. Okay. As soon as I clock out, I wait to get paid, or I wait to pay, right? Maybe I put some meals on my tab or something, you know. It's going to be small and insignificant if it's a loss. Otherwise, it's going to be payday. So if you logically think about it, by continuing to do analysis, by continuing to work and commit more time, more focus, more attention, and sometimes even more money to a situation like this after you're done working over here, you know, you're really only hurting yourself. You know, you're just putting in more work, more time, more attention for less pay. Does that make sense? Like, the outcome here doesn't change. It's still going to hit one of these two levels. And you were okay with it hitting this level and this level when you got in, at the end of your shift. But for some reason, we like to do more work, and that doesn't change the outcome. It just changes our participation within these two levels. And that's where we hurt ourselves. Or, you know, potentially we move our levels down and we compromise, and then that just makes it worse, right? So I hope that makes sense. And if it doesn't, please just let me know in the chat, because that's the important. It's a super important concept, because people tend to overwork and then they get upset when they're not paid fairly. Fergie says, if I have time, I think things moving up produces dopamine and then moving down produces cortisol. Yeah, I mean, that's it's natural, right? We want to commit time, effort, resources, and then we want to be compensated, because everything outside the market conditions us. That's true. Give me one moment, guys. I'll be right back. Guys? All right. So let me just catch up on the chat here. Yeah, and like I said, that's how your brain is wired outside the market. And then when you get into the market, it's the same processes, but it works against us, right? So when we anticipate something, our brain gets dopamine, and that's a big down payment, right? It's bigger than the reward set of dopamine. And then when that anticipation isn't sustained, right, we start looking for ways to find it. ABV halted, yeah, that's going to be risky biscuits. I'm not going to touch this one today. Because that little dopamine seeker in our brain wants more, right? So it wants more. It's going to start stealing, right? It's going to start lying to us. It's going to start telling us we need to get busy and doing stuff, right? And that's where we hurt ourselves. So also, let me just make sure I unmuted. This is all stuff we talked about in Chicago. So I know this stuff. I'm just kind of reiterating it for everyone else. So when you're unable to sustain that, like there's dopamine, right? The anticipatory surge. And then it's going to try to plateau, right? And because it wants to have its own little resistance breakout, right? It wants more. But what happens is it can't get more. Instead, it gets a fall off, right? And then it's the same as your brain when you're looking at a stock. It's like, oh, it's going to bounce. It's a FOMO, right? It wants more dopamine because it wants to get up here. So it starts doing things impulsively. And then that's when you start hurting yourself, because this whole slope right here is impulse. It's doing things to try to resolve this resolution that it never got. And this, we can call it a fair value gap, right? It wants its juice. It wants it right now. And it's dangerous, right? So that's where we hurt ourselves. So the only way that we're actually going to close this is by shifting the value of this line and this line to things that are more reasonable, and bringing them back into sync with the things that, oops, let me just close that. Bringing them back into sync with things that make sense. So in this case, in order to do that, we need to shift our focus on not the end result, but the execution. And that's where we get a more sustained trajectory in that dopamine. And then, yeah, it's going to fall off eventually, because you can't chase stimulus forever. But it doesn't need to be as drastic of a sell-off because of that mismanaged expectation. So it's a lot easier to manage our conversation at the higher level, the beginning of the conversation, than it is at the end when the emotions are flying around and all that good stuff that we talked about in Chicago. Because once those are in the mix, it's game over. Sorry about that. SAFX. Okay, so you traded SAFX. I'm sorry about the time-sensitive nature of that. Yeah, so where does prayer come in? What happened there? You're going to swing trade SAFX. Okay, what do you like about the company? Like, what can you tell me about the company itself? You got in at 260 and you pulled out at 275. Okay, that doesn't sound like a swing. It's okay. If you second guess yourself, it's okay. What was your original analysis on that? What originally compelled you to want to get into that one? I'm glad you got out, because that means you weren't confident in the trade. And that's all we need. Okay, the graph looked like a reversal on which time frames? The daily? The hourly? Because the daily chart? Okay. So this is not a reversal. Just for your benefit here. I can see where you'd see that, like this little, maybe this like curl situation here, but that's Like if you look at the lower time frames here, I'll kind of explain this. This thing does not hold profits, right? It'll have these out of nowhere pops on random surges of volume, and then it immediately gives it back every single time, right? It's a relatively new IPO. They just launched in June 9th, right? So they're a little over a month old, and they just can't hold their profits. So in order to swing trade this, the only justification I could see might be like a short-term fib retrace, but even that, like there's no justification for it. You know, like it's a very dangerous one. So stocks like this that have these little spikes, I almost never hold. I only ever scalp them when there's volume, and I just get in and out as the volume's pushing. If it does any of this like push-pull stuff, I get out of it. If it goes sideways, I get out of it. If it goes down, I get out of it, obviously. But stuff like this, where it's just those nice clean pushes like that, or, you know, like something like this, I'll trade that all day. I'll trade this all day. I don't like trading this stuff. And I absolutely hate trading this stuff. Does that make sense? So if you're on the daily time frame, which one does that most closely resemble? Right? If we look at the amount of red candles to the amount of white candle or bullish candles and the size, there's very little chance that this can be viewed with any kind of strength. You know what I mean? And it's okay. Like it's okay to be new and to not know what you don't know. So I'm glad you pointed this out, and that you pointed out that you managed your risk because you weren't confident in the trade. But you know, that's what we're here for. That's what this is all about, is to help you guys get that confidence and to be able to justify your stuff based on objective things like, you know, the quality of the company from a fundamental perspective. Like, what does the company have going for it? Are they good at managing their cash? Do we know anything about their products or their partnerships or anything that matters from a company level? Is the company and the CEO making money? And are they willing to share it with investors, right? Those are really the only things that matter to us for swings, right? And then for speculation, we just need to focus on, do we see a low risk opportunity with high potential, and is there volume to support that? Is it going to happen soon? Can we be efficient about it? Or does it involve holding and enduring a bunch of chop and stuff like that, which I don't like doing. I'd much rather just go where the volume is for the day. If I'm day trading. If I'm swing trading, that's okay too. I'll look on the higher time frames. I'll still look for the same stuff, right? So then, just for fun, right? This is obviously coming down. It's in a downtrend here, so I'm just drawing this to show just a quick example here of that very easy color change, you know, shapes and colors criteria. This is the kind of stuff we do if we don't care at all about the company and we're just looking to get in and out with a quick profit or a small loss. And, you know, for the 1% rule, it's a 2% risk. So you'd use half your position. And then you'd walk away with a 3% profit. This trade and this trade over here are exactly the same in terms of the setup, right? Because if we go back here and we look, we see, you know, a bunch of low candles here. We get a red, and then we get a color change, and it just happens to have stopped out. This is exactly the same in that you've got a series of lows, lower highs from candle to candle. You get a small red candle here, color change. And this one looks like it would just happen to have hit target. Okay, if it does. I can't say that it will. I'm speaking a little early on it, but it's still got the volume and looks like it should, but just pretend it has already. Does that make sense? Like, these two trades are exactly the same. They might look drastically different. The sizes are different, but we can make them exactly the same. So there we go. We would hit target. So if these are the only two trades you took today, this entry here, you would have a 1% overall loss on this one, and you'd have a 3% overall profit on this one, which would put you up 2% for the day. You could move on, live your life. Does that make sense? And it's a mechanical scientific process that would get you to that end result. It's not like there's a reason I'm able to hit like 5%, 5+ 4 days in a row, right? I'm just using very specific mechanical strategies. And that's kind of what I want to get you guys to, but it takes a little time. Like Tesla, for example, it's still in that opening range. There's nothing we can do using the opening range break strategy, unless you're using the pre-market range, which, you know, let me just draw that so you guys can see. You know, if you draw the range here on the 15-minute, which if we just come up with the 15-minute, you guys can see. Then we do the 5-minute. We draw the line that comes out, and then we go down to the 1 minute and we look for retests. And then on the retest bar, we look for low risk opportunities. All right, so there's that. So this one would have stopped out right here. Let's draw like a 1 to 2, probably is safer because we'd be trading options at this point. And then we get one right here. Now it says a bigger risk range, so we want to make sure that we use the 1% rule. Okay, there's a 1 to 2, and that one would have hit target. And then let's see, this one doesn't quite touch, but we can draw it out anyway. We'll just draw it for the fun of it, right? There we go. And then 1 to 2. All right, there we go. And that's it, right? That's about all we can do, even if you're using the pre-market levels there. So this one right here is probably the only one that would have made you some money using that specific strategy. But just to show that it is still possible to make profits, you know, the specific strategy you use doesn't make any difference materially. It just determines whether or not you get X number of opportunities versus Y number of opportunities, and then their specific end results. But it's the overall set of trades, the overall set of results, and your ability to execute consistently that makes you a successful trader versus a non-successful trader. And that's kind of how the profits take care of themselves. So does that all make sense? I know I'm kind of rambly here. But I don't want you guys to hurt yourselves unnecessarily. So ABB halted to the downside here. So yikes. This is where it might get a little scary, right? Because remember, all these people didn't have these shares at the start of the day. And that's a lot of volume. You're looking at 138 million shares. That could potentially slam this thing back to the downside. So be careful. Butera says, is like setting daily target trade and stop right. Are you asking about setting daily limits for yourselves? So personally, I like to do 2 trades. I use 2 trades a day. If the first trade is a winner, that's it. That's my 1 trade for the day because that 1 trade should hit my target. Okay. If that first trade is a loss, then I have my second trade. And then that's either a second loss or it offsets the loss and I end up in a net profitable position. So if if that's my strategy and I can do that, any deviation from that is a violation of that trading plan, and that's a non-successful day. Okay. If my first trade doesn't hit my target, then that's something I can adjust, right? But most days I obviously can do that. Now the unique situation I am in is because I'm live trading and I'm streaming and I'm sharing you guys, I'm sharing stuff with you guys so that you can use these examples. So I take 2 trades anyway, but that's just to demonstrate proof of concept. And that's pretty much it. So, but no, for my day to day, I usually just take 2 trades myself. Anyway, there's a million ways you can do this. I just take 2 trades and then I either have a small loss for the day or a fixed target for the day that I achieve pretty consistently. Now, if you use the 1% rule, depending on the price of the stock and all that good stuff, you can end up taking like maybe 5 trades a day. And each one will get you either 1% loss or a 2 or 3% profit, depending on your ratio. So you could, in theory, be up maybe 10% per day if you got the right combination of stocks and opportunities and they all profited. And the max you'd be down is 5% for the day. So it's relative, right? 10 or 15% up, 5% down. But I don't use the 1% rule on this account. I'm just trading 50% position size with 6% targets, so 3% overall. Fergie, if it resumes and the resuming price is below my stop, it will cancel my stop. So if your order is a stop loss and the market price fills below that price, then yes, your order it'll become active and it'll be added into the execution chain. At that point, the exchange is just kind of going to fill whatever it can, however it can. So you may or may not get filled soon, but market orders tend to get filled last. So yeah, it'll become active, it'll trigger, but there's no guarantee when it'll get filled. Retail Trade says 3% a day of portfolio. Yeah, it's 3% overall ROI. So far this week, Monday, Tuesday, Wednesday, Thursday, I've been up 5% plus. But that's because I'm taking that second trade. So I'm either like 5.8 to 6.4% up day to day. Active is good. I just don't want to. Yeah, that's kind of the downside to stop losses, is that they just kind of get filled whenever. They don't get priority. That's why I like to keep them nice and tight, especially on low float trash like that. So this one should be on halting here any second, unless the exchange is manually adjusting and reviewing it, which I doubt. They typically don't do that on stocks that have less than like 300 million shares. So they're probably just going to let this one kind of go halt to halt to halt. Real Deal Trade, do you run any small account challenge? So I started the Rags to Riches project last, it was like November 2023 or something like that. I can't remember exactly. September, I think. I grabbed up about 50 of the members here, and they all set up their own accounts, just because it's different when I'm doing stuff versus them. So I taught them some basic investment stuff and dividends and compounding stuff. They did pretty well, and they shared all those results publicly. I just have these small cash accounts that I trade. I demonstrate proof of concept every day. So this one I started on Monday with 199.11, I think, and today it's up to 251.35. So I'll probably just stop trimming this one and just let it grow a little bit, just to show how that 3% compounds. If that's what you're asking. But I don't believe in challenges per se, because I feel like that creates a sense of FOMO that's unhealthy. I'm just going to let you guys see what happens with the account. So I wouldn't really call it a challenge. I think it's catchy, and there's a lot of FOMO that comes with that, because it's a way to gamify things, and that's a lot more entertaining. But if I can just walk you guys through an account growth, you can call it whatever you want, but I don't like calling them challenges. Fergie's 90%, 95% out with great profit. Just have 100 runners with 92-cent cost. That's insane. Good job. Good stuff. That one, on average, how much capital do you put on a trade if you're looking for 3%? Well, there's a million ways to skin a cat. So for this specific account, we're using this specific strategy. I always put half my portfolio in to one of my two trades. And then since it's a half size position, or a half portfolio position, I take my profits at 6%, because that's what gets me to 3%. So I've made a 6% ROI on 50% of my capital, which is 3% overall. But there's a ton of ways you can do that. Like you can just do 1% rule trade, and that would get you your 3% if it hits target, or a 1% loss if it hits a stop loss. And then that cost might only be 20% of your portfolio, depending on the price of the stock. So that leaves 80% of your money left for another trade, right? And that would be another 3% if that first trade was a loss of 1%, and so on and so forth. So you could, in theory, take multiple trades a day using the 1% rule, or you could end up just being locked into one. It really just kind of depends on the percentage range and the cost of the shares. And then since I'm just using flat fixed positions here of 50%, well, second one's 48% because there's an insufficient funds like weirdness. But it's about half the portfolio for those two trades, and that's all I do on this one. So, and I also record these. I record all these live streams. I put the snippets on social media. I put them in the profit channel. I'm a huge fan of proof of concept, and honestly, if somebody doesn't show me that their stuff works, I have a lot less trust in it. So I'm hoping to convey that to you guys as well, because I know that you guys are really just looking for the end result that works. And 4 days in a row here, I've been able to slam 5+% with like minimal effort in like a minute or two a day. So I know it's flashy to want to chase options, and it's flashy to want to trade the big stuff, the fast moving stuff a bunch of times. But that kind of stuff, if you can't do it for yourself, it's not sustainable. And that's why I demonstrate the simple stuff with tight ranges. 3% compounds insanely well over the 250 plus trading sessions there are in a year. Up to 6+ figures. I mean, you turn $100 into 6 figures in a year. I'm okay with that. That's good enough for me. If it's not good enough in terms of ROI, I think that's worth a different conversation. And yes, as the account grows, we can scale into other strategies. We can, this is only $250. I don't want to trade like Tesla market open contracts on an account this size. It would just destroy the portfolio the first time I was wrong. So I don't want to do that. So for now, I'm just getting those 3 to 5 to 6% profits on a daily basis and letting them compound. And we've taken 4 days, and this account's up 25%, which is about a year's worth of dividends if you build a good dividend portfolio. What days do I trade here? I trade Monday, Tuesday, Thursday, Friday at market open. Lee, so Mad Maverick, he trades the market open in premium on Wednesdays. And then I do in premium Monday and Friday. And then Tuesday and Thursday, I'm here in free. So Tuesday and Thursday, if you're a free member, that's when you'll see me here. You see me on social media. I have the YouTube, the Twitch, the X accounts, and the Kick, as well as here in the free section in Discord. And then if you're in premium, you guys will see me on Monday and Friday at market open. So tomorrow morning, I'll be in premium. And then you'll see Mad Maverick on Wednesdays. And then on those days, I go over into the lifetime stream, and I stream there and I try to record. But I also don't want to distract from Lee's stream on Wednesday morning. So I just kind of pop in there and then I record it, and then I post the recording for them to watch later. So Lee's one of the coaches, so I'd rather they go and watch his stuff. I'm the lifetime coach, but it's a little bit more expensive to get up into that program. So Lee and Bull's coaching programs are much more accessible. So, and then on Friday mornings, I also have the Rags to Riches live stream. But that's free. It's with the Rags to Riches team, but that's more review and psychology stuff and portfolio management stuff. And then Monday also, I stream a lot. Monday afternoon, I also stream the lifetime. I have a dedicated lifetime stream. So one day we'll get you in there, but it's a little bit of a cost barrier for a lot of people. And then Bull every Tuesday, Wednesday, and Thursday, just so you guys have good insight into our streaming schedule. The Swinging Bull, he streams every Tuesday, Wednesday, and Thursday for earnings at market close. Every Friday at 3:30 Eastern, we have a weekly wrap-up in premium. So that's basically the whole staff gets together. It's less stock related. Well, I should say it's less analysis related. We just kind of recap the week and kind of focus on community. It's kind of fun. And then each of the coaches has their streams, in the coaching program as well as for premium. I'm trying to think of what else. We have the psychology streams on Tuesdays. What's the purpose of earnings streams? It's so you can watch how the earnings calls, the calls themselves go, the data comes in, and Bull watches the charts and kind of walks through their reactions. So it's for people that are looking for earnings catalyst insight and stuff. They're on socials. Here, what I'll do is I'll also put if you guys are curious, I have the sorry. I have the watch list link. It's I'll put it on the social media as well for the live streams on there. But if you guys are here in the Discord, you guys can just look at that channel there. It's pinned every week. It's got the streaming schedule as well as the earnings calendar for the week and the Fed talks. So like yesterday or Tuesday, I think. No, it was yesterday. No, it was Tuesday. We had the Fed meeting minutes notes. So not a stream, but it's important to know when those notes come out. Fergie says it's a great community and lifetime is totally worth it. You get one-on-one meetings with the analysts. Yeah, I'm glad you're in there. That's I think it's definitely improved your trading and just the community. I mean, it's a community for sure. But yeah, no, you guys have been making a lot of progress in there. I love seeing it. Even you, Duco, with your 3% and you're done for the day. Community. No, we don't. We defend ourselves against your abuse. Yeah. Oh yeah. Get off there's Mule. Old Grumpus. I'm just kidding. We love Mule. Honestly, Mule is one of my favorite people because that dude stuck it out. You know, he was trying to find his edge for years, right? Just kept plugging away at the data. He was here every day, just pointing it out, you know. And then he just had to find something a little more mechanical, and then he did, and he's absolutely crushing it now. So hostile, Duco, trying to stir that pot. But I'm super proud of Mule. I told him back in the day he was going to be my red to green poster child. I love it. Snowflake better not be cursing in the research. Let me go in there and see what's going on there. You guys are welcome to snitch on each other. Let me know. ABV has been halted more than not in the last half hour. Yeah, so they're not adjusting the threshold, which means that everybody's orders are just sitting there. And as soon as it unhalts, it just floods them through the queue. And that is enough to trigger another halt. So you got to wait till all those orders clear out. And that's where, you know, your stop loss order might have been put, you know, up here somewhere, but it might fill down here, or down here, or down here, or down here, depending on when it gets through, right? So that's why you can be careful with these low float halters. And that's why I don't like chasing short squeeze claims, right? It's a different market than COVID era when everyone had that government money. Snowflake has to speak through gifts. Yeah, I don't know what's going on with that. I've pondered it. I've pondered so much. There's got to be something on his end. I don't understand it because you guys are all able to chat and you have the same exact roles. I promise I didn't set up any kind of explicit permission against him. I think it's his operating system on his phone. Yeah, I'm sure. I checked. Babu Chris can't type in here either. I wonder if they're using the same phone or if it's the same firmware. This is interesting. I'm curious now. We've got 2 points of data here. Duco, you are a lifetime member. It's not a lifetime problem. You and Fergie are in here, and Tammy. And soon to be Ethan G. I'm just kidding. There's never any pressure, by the way. I'll put it in front of you guys because I want to see it benefit you, but don't ever feel like there's any pressure from me to buy stuff. Yeah, happens. It's a phone thing. I'm pretty sure it's just a Discord phone app garbage problem. But let me end the. I got to end the live streams here, just so I don't, I don't want to waste anybody's time out there. So thank you everyone who was watching on live stream, and thank you all for chatting. And I'll join you guys in the Discord here for a minute. Let me put the link in there, so that everyone on social media can come into the Discord. And I'm going to end the recording. Thank you.